Back to Basics series, time versus price corrections. Let's go.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
This is Dan Max at eXp Realty, aka the Trading Agent. We're doing a back to basics series on time and price corrections. If you're not familiar with these concepts, let's dig into it. Again, if you are newer to the channel, please check out the Discord room. Link is in the description below. Have all the videos that we've ever done lined up, and also it's all stored on YouTube. But there's a ton of information for traders to gain knowledge, kind of learn things from a perspective of someone who's been trading for 20 years. Again, people who promise certainty and not losing are just, they don't, it's a facade. Again, it's a probability game. We're going up against the house being the market, and the market wins. 90% of traders fail. So if you don't understand these concepts, and again, really feel a little lost, that's why I'm here to help. I always tell people, like, there's a lot of traders out there have great insights and knowledge. It's just putting it all together. And back to basics, this is where we talk about some of the things that are the fundamental to the market that a lot of people might not be comfortable with or just never experienced. So time versus price corrections. Well, the description of them makes hopefully it's pretty simple. A time correction is something that takes time to correct, meaning weeks, months. Again, it really depends on the chart too. If you're looking at a 10-minute chart, sometimes there are price corrections that are time corrections that could be hours of just chopping or basing. We've seen that. You've probably seen that day trading. And then you've seen, same thing, price correction. You've seen a monster move down or monster move up, whatever you want to describe the correction as. And obviously price, well, it's usually a straight line move. That's the correction. You wipe out everybody and you correct back to the mean, the median, whatever you want to call the average move. Keep in mind, like, the market is a regulated mechanism that always reverts back to averages, because the market is not obviously rational, but people tend to have benchmarks. They tend to have belief systems that play out in the market. So one of the ones that I always like to talk about when I think of time and price corrections is gold. So you have, and this is what typically happens after a bull market. Nice big run up. Then you have followed by potentially a price and a time correction. Here was your price correction, right? Does that make sense? Like you went from 87 down to like 100. That was your price correction. Then followed was time. It just played out time. And once both end, well, you usually start a next bull market. And it's funny to see, the big cup and handle sequence. And right now we're having a little bit of a time correction. Like you had remember, it goes both ways. You had a big up move. It's consolidating. It takes time. And again, it could turn into a price correction. There is no guarantee. It's not. I highly doubt it, especially with gold, because the longer the base, the longer the formation. There's a lot of weak hands that got shaken out in these, what it almost seemed like 7 years, 6 years. Now what? All right, you run up really big. Now you got to shake out. And then it's clearly taking 2 or 3 years. And keep in mind, the more shakeout, the bigger the move, right? You shake out weak hands. Think about it. If you're not selling up here and you're waiting for higher prices, you really, and coming from the perspective of stronger hands, meaning people who are just not in it for the trade, this action doesn't bother them one bit. Keep that in mind. That's how that's part of, when they say diamond hands, really is, the joke I always says, it's not really diamond hands. It's more of just people holding who aren't going to sell. It's like your house. You're holding on to it. You've decided you're not selling it. Well, same thing with certain parts of the market, right? They're holding on to it. They're not going to give it up, right? And when I mean they, I mean whatever institutions, whatever trader, I'd say investors who have a long-term play. NASDAQ, here's a great example of time versus price. Here was the price correction in the NASDAQ. In 3 years, it went from 120 to 20. Then the time played out. And this is what can be very difficult, is when people say time, they like to use Fibonacci time sequences and they yada, 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 all this there's a lot of technical analysis of, I would say, time corrections. And the one thing that I've personally found, because people will say, oh, it has to line up with Mercury retrograde and yada yada, all these holidays. Yeah, no, I haven't found anything that's 100%. So at this point, what do I always tell people? The best way to tell if a correction is going to end near term is what? There's usually capitulation. There's usually formations, tight. Again, tight. And when I say tight, like tighter ranges, big volume. Look at the volume here. The bigger volume here, I'll just zoom it in. Bigger volume, tighter action, right? Capitulation. As you're dropping the volume, panicking. But remember, the market makers are a liquidity-seeking mechanism. The highest volume was at the lows. They absorbed it, and then it started a bull market. Same thing with 2008. Tight action, right? Months of bottom, consolidate, and then go. I hope this helps. Now, again, on a relative basis, intraday and trading, these are not really things that I think about other than in big market shifts, right? Because there will be times where, let me see if we can find it in a bull market, because you have to keep in mind, in a bull market, it's more of price corrections. They're not really time corrections, because in a bull market, it's up, you're going up all the time. And so the difference in that is, if it's the market, it's not so much. You see how this continues up. You could consider this time correction, but that's more of a price correction, we'd all argue, right? I think you find it probably more in names that, this is what I just thought of, Beyond Meat. Somebody's like, oh, I'm looking at this stock, right? It's had the price correction, right? If you look at it, it's gotten absolutely murdered off of, the highs here. It probably goes into a time correction. So that's where the sideways action, where someone will be like, oh, I want to buy it here. This is going to take time to play out. And ultimately, one of the things that I try to explain to people about these, just this thought process is, if you can identify that a stock is going through a time correction, it's going to be choppy, sloppy, and it's just going to base out. Again, 99% of the time you see, not 90% of the time it's price correction, then you start higher in a bull market. In a bear market or a wipeout, you're going to see both. You're going to see probably a consolidation at the lows and people just gave up. And you saw it with tech, right? Like, that was the best example of to recent mind for people. They don't realize that literally, if you go look at the Qs, they underperformed in the 2000s pretty badly. You didn't get back up to even until 2015, right? Hopefully you can see that. Well, what's the corollary of that? I always tell people, like, go look at the material sectors. Pick a material. Let me do some of these, like, agriculture stocks, because I think they had what I would consider massive price corrections. Here you go. Big monster run up in the 2000s. Same thing again, here's your time correction. Just goes nowhere. This is really hard because this is years of pain. That's why I tell people, like, I don't want to be involved with gold or stock or whatever it is when it's in a time correction, because you don't know. Here you go. Up, price correction, and then boom, going nowhere. Again, I like these names long term. I think you've started the upward cycle in commodities. But look what happened after that correction. It was just time. And this is why I always tell people, stick to the market leaders, because the market leaders move with the market. Imagine owning the S&P 500 for the last 10 years and you didn't own leaders. I've been stuck in this trap, trust me, because I honestly have been there where I thought commodities should come back out of, a market and act better. And this is what you're stuck with. And that's where, I'm not going to divulge into a whole nother topic, but this is really why this matters, is if you can tell something is in a time correction and it's not following the market, how do you use the market as a reference to trade then against something that doesn't follow it because it's in a time correction? It doesn't matter. So this is where really the whole key point of what I'm talking about with time and price corrections. Because again, if you follow the market, right, you need to use the market as your references, right? If something isn't following the market, it's probably stuck in a time correction. Or best way to just call it stuck. When you say time is obviously of great determination based on what? Nobody knows. but if it doesn't follow the market, that's where you got to be a little aware of. And so here you go. Let's roll into something that might be a little more relevant. I think the price correction in the XOP, I think oil service names, here you go. Here's your price correction. I think they have a time correction now. They go sideways until oil goes lower. Again, why I'm short, think oil is a short near term. Keep in mind, near term, I'm thinking 3 to 6 months. Long term, I think if we don't really figure out our oil situation, oil prices will be triple digits for the rest of my life, potentially. Well, again, after the time price correction, if it is going to go lower, it takes time to base out, shake out, go, bring in bulls, bring in the media, bring in everyone, the hype, and then boom. You've seen this now. If you want, think about it. Like, we'll pull up any stock, and here you go. Here's silver, my favorite long-term play. It's in a massive time correction. Look at this. Price correction, time correction. Now, buying physical is different than trading the paper game. I recommend physical if you want to hold this long term. But I've been buying this stuff, literally since 2014. And I don't ever chase it, and it comes back. And now what? Here you go. Here's the start of the bull market, in my opinion, but backing off. So think of it like, here's an example with XOP. XOP, big run up, bases, backs off, starts the next leg. Keep in mind, multiple waves of, again, wave theory, I don't really agree with it. The formations, I just understand, like, there is waves. Like, there is psychology of this. So think about the XOP. Here you go. Pop up, consolidate. Time. Time has to pass. Pop, time. Pop, time. Again, you could call these price corrections, but again, I think what I consider a price correction is this. Something actually, especially if it's a monthly chart. Now remember, this is all relevant to the time frame you trade off, because a 10-minute can have similar, a daily can have similar. Think about it. Like, everything is based on what your reference is. So if I'm thinking monthly, I'm thinking months of chop correction. So I hope this stuff helps. Again, like, there's no easy answers in trading, and that's what people really want. And I always tell people, like, experience is your best guide. Study the past, because if you're staring at this present and thinking you're going to anticipate the future, that doesn't make sense. It's like watching like that. People read books and study the past to build skills for their future, yet they don't do it in trading. They don't study the past. They don't study other mentors. They just think, oh, I'll just watch the current market. That's not how you develop a skill. So again, we know the past, we study the past, and a lot of people go, well, what do you anticipate, if this is a bear market, Dan? How do you know this? So, like, let's get into a little deeper stuff if you're sticking around. Well, what did we say? We didn't really know the Qs were in a bear market until what? They break the 20-month. When was the last time you broke the 20-month? Again, in bear markets, you broke the 20-month, folks. The whole way up, you had what I would consider little corrections, but you never sustained a break of the 20-month. Well, the 20-month is broken now, but doesn't mean it can't bounce. That's where I think people get confused when I'm saying, like, I'm expecting a bear market rally. It's a whole nother video, or stop by the Discord room. But the longer term trend is going to be down. It's just not going to be every month. Hope this stuff helps. Again, if you're a little unsure of things, think again, always from the time frame. Like, what chart are you looking at? If you're trying to find a time or a price correction, trying to find a price correction on the monthly versus the daily or the 10-minute, they look totally the same, but they have different outcomes, right? You might not even see that price correction, that time correction on the monthly if you're looking at the 10 minutes. So I appreciate you guys. Hope this helps. Talk to you later.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.